Good morning, everyone. I am A.F. Thornton, Chief Investment Officer of Blueprint Quantitative Strategies, and I want to welcome you to our Morning Notes live show this morning, and quite a bit of ground to cover. The title of this program this morning is X Marks the Spot. So I'll tell you what all that means in a minute. But for now, let me just get out the risk disclosure. You guys know the score here. I mean, this isn't investment advice. This is education. We're trying to help you learn how to trade by sharing our philosophies and our strategies. And that's the sole purpose of this. It's not meant to be investment advice because we don't know you and we wouldn't even know how to advise you without knowing you. So we'll leave that there. And then, as I mentioned often, we're new to YouTube, Rumble, and all the other platforms that we're on this morning. And so we always appreciate if you could hit the like button just to help support us and support the growth of this channel. I think you'll find that the information here is second to none. There's nothing else like this on the internet because there's nobody that does things the way that we do. So at any rate, hit the like button, consider joining the channel. And also, you know, there's a notification button there if you want to be notified of these future broadcasts. So hit all those, and you can get more information on us over at blueprinttrading.com. Just remember, don't leave out the E in blue. So that's our little twist. So let's just jump right into it. And I'm going to start with the Navigator Algorithm, which is our proprietary product. Something we developed, or I developed over many years of trading experience. So let's go right there and kind of see where we're positioned this morning. And we look at this in two ways. First of all, we always look at where the daily chart is and the daily data. And then for day trading, we use a 15-minute chart as sort of our overlay or anchor chart. So right now, we've been in as you can see here, a volatility squeeze firing long, brief volatility squeeze. That's something we identified a week ago. And then here's the dashboard readout. It does say we're coming out of a kill zone, which is what we call a sideways market. The strength of the trend is not strong. I'd like to see that over 25. But otherwise, things look pretty good. We have, a pretty good rally on our hands. And right now, we're trying to break out of this range right here. So this does not include the overnight data. This is, I always trade based on regular session data. So I just want to point that out. It would look a little bit different if we turned the 24-hour data on. So let's go to the 15-minute chart, though, because that's our anchor chart, kind of see where we're at. And this is certainly advising caution. We've got some algo sell signals, the first one here, second one here. So we are in a sell signal on our anchor chart. So we're going to want to be a little bit patient this morning. There's some other reasons to be patient as well. Kind of getting a little bit of an exhaustion signal if we look at our DeMark indicators. So in fact, if we flip over to an hourly chart, just briefly, you'll see that we've got a 13 and a 9 count up in this range here. So we have to be careful here. We don't want to, new long positions are probably not advisable. We'll see how the day sets up. But for now, I would be probably looking for shorts more than longs. Like I said, we'll see how it all sets up. So keep that all in mind. There's other reasons to be cautious. We're at the top of the expected move for the week. And we have come a long ways. I mean, you can only ask for so much, right? So that's where the algo sits. So let's jump into my favorite part of this, which is why. Now that's assuming I can get control of my screen here. Why I say X marks the spot. What's that all about? And we're going to find out if I ever get control of my chart here, right? Why is this stuck? Well, let's just work on oh, I can see. This is a problem with having too many screens. Something's stuck up at the other screen. All right, so let's get that out of the way. And why X marks the spot? Well, first of all, let's look at our sandbox, not only for the week, but for today. And so here's our weekly expected move sandbox, and you can see we're already at the top of it. And one thing I can tell you about the last week is the market has been more orderly. So these moves have been honored. They're honored about 70% of the time. Sometimes the options market does misprice things, so keep that in mind. Be aware of that. But for now, we're respecting that range. Now, we also have an expected move for the day, but there's a little conflict because today's expected move would take us outside of the weekly expected move. Now, when you're at the beginning of the week or the middle of the week, that's okay because the market has plenty of time to come back in, because the dealers and market makers will defend this level through Friday's close, which is when the weekly options expiration occurs. We've seen them from, whether it's down here, up here, they'll tend to bring it back to that level. So it's not impossible for the market to continue up to my X, and certainly my X, one thing that leads to that is the daily expected move. But the market would have to be pretty out of control on the upside to do that, and more than likely it's going to respect this range through tomorrow afternoon, and then maybe we'll get up here next week. So keep that in mind. But the first issue about X marks the spot is that is the top of the expected move for today. Now let me turn a few of these off. Just keep that in mind because I don't want too much. You know how I feel about having a cluttered screen. So let's get all that stuff off, and then let's look at the channel that's forming. Oh, let's skip that one. We'll get to that in a minute. I think what I would want you to know in addition to this right now is you can see we've got some supply lines here. We've got some demand lines down here. We're going to draw those in. But we're right here around this 40-60 level, and there's a lot of things happening there. It kind of looks like Grand Central Station when you actually draw it out. So there is our demand line down here, not really relevant. Here's that parallel channel I'm talking about. And if this is an extended flat, meaning this is all still a one wave, remember, our thesis coming into this June 17th low was that this was a falling wedge pattern, right? And we expected, and this is the 40-week cycle low, which is important low, 9-month cycle low. And we expected more of a two-wave up that would be more significant than these little runs we've had here. And that goes along the lines of every bear market. You go back and study about the 8th and 9th month, you'll get a rise for a couple months, even if the bear is going to continue. So whether this is the low of the market or just a low, we expected a little bit more action here. It kind of sputtered a little bit, but it's finally taking off. However, this spot here is going to have a lot of resistance, and we'll show you that here in a minute. But that's kind of where we were. But let's see how this develops into Grand Central Station. So we've already said the daily expected move high is up here. We've got the top of this channel that's forming. Even if this is just an extended flat pattern, that could be the end of it. And we have to take that into account. So let's look down here. Here are our supply lines coming down. Now, there's a very short-term one here that I think we've conquered, but we do have the supply line that again is coming into this X marks the spot area. That one I think we've already broken. I think the other thing that I would note, I mean, we're at this, if we just took this last capitulation decline, we're at the 61.8 retracement. So that's, you know, again, another potential intersection point. And, you know, we're close to the 50% retracement of this whole decline. But here's where it gets interesting. So here's our algo trigger, one of our stop lines. Here are the monthly 5 and the monthly 21 EMAs. Now, note that they're probably crossing, although those things move very slow because of the fact you have to wait a week and a month for a new bar. But the 5 EMA on the monthly chart is very, very important. As long as that's providing resistance, we're going to remain in the bear market. So I look at this key intersection up here around 4080 as being very important in that respect. Now I'm bringing in the weeklies, and let me just put the ones that are irrelevant away. But in any event, on the weekly chart, here is the 21. That's the weekly mean, coming in right at the exact same spot. So that's, again, pretty important. And then the 89 on the daily chart sits there as well. So right now we're looking for the 5 weekly and the 5 monthly and the 5 daily to provide support. But we've got the monthly, the important monthly MAs, the important weekly MAs, up here to provide resistance right around this 4160 to 80 level. Believe me, those are brick walls. That's why this looks like Grand Central Station up here. So that area is going to be very, very important. And then if we look at our key gamma levels, there is definitely that level is where the volume actually, we hit the next kind of higher volume node resistance, and that's after we get through the air pocket that we've been talking about that sits up here just right above where the price is now. It starts at about 40.75. So you've got a lot of reasons to be concerned. I mean, this is the call wall also coming into the spot. So that's a lot of strikes in gamma in the options market sitting up there that can cause problems for us. Now, if we come over here and we look at just the volume profile, here's the current price, the yellow line here. So you can see we're just below this air pocket here. And then we get up to about the 4070 level, which is where we're seeing that intersection or X marks the spot. So this is where we're at right now. And when you get into these air pockets, there's not a lot to stop you, but remember that 4000 is right in the middle of the air pocket. And that's where the largest gamma sits right now as well. So again, very important levels to keep in mind. So here's the bottom line for today. It is possible that with FOMO and short covering and everything, we could get to this level before the end of the week, even if we turn back down to come inside the expected move because the dealers are fighting us. But other than that, I would tip my hand or just slightly favor just messing around here through tomorrow, and then if we're going to go up and capture that level, we'll do it next week. But remember, if we get up into this price range, there's not a whole lot to stop us, at least to 4,000, and then we have to get to this 4050 level and see. I mean, you've got a downtrend line, you've got upper time frame moving averages, You've got the top of the daily expected move. If we hit there today, you've got just a plethora, the highest gamma level, call wall, all that sitting up there that is going to be a big obstacle to get through, especially in the bear. Now, we may get through it, but we're going to have to monitor that carefully. So I think for today, I'd be very cautious about long positions. And we're now about, in our swing strategy, we've got about a 40% investment in August monthly SPY calls. And we're kind of using the 5-day line as our stop line. But I don't like to give up profit, so we'll see how that goes later today. The 5-day line, let's just throw that back on today. And again, we've taken those positions, at very favorable levels, so we have a lot of profit right now that we don't want to give back. So let's look at those levels. Kind of slow this morning. All right, so there's the 5 EMA line, which is sitting around 39.20. So right in there, I'll hang with the program, but not too much beyond there. So anyway, that's kind of the picture this morning. So I'm, the rally has done well. This is a formidable spot to get through. And at this spot, there's still the possibility that this was an extended flat 2-wave, and the bear market could resume from here. A couple of things on the global front. I guess, Russia's letting the gas flow back to Europe, so that's a positive. But today, this morning, the European Central Bank raised interest rates by 50 basis points for the first time in 11 years. That's a pretty amazing statistic when you think about it. 11 years with no rate increases, and now they're going to start increasing rates right into the recession. That always makes a lot of sense. But who am I to question it, right? So anyway, overall, though, our thesis has been coming to fruition, and there was a couple of moments of doubt there, especially last Monday, but I think, our patience has been rewarded. We've ridden every one of these swings up. So it's been very positive. And that brings me to mentioning the trading room, which is open on Tuesdays and Thursdays. We've only been doing the trading room for a couple of weeks, but everybody's had the opportunity to make a couple of $1,000. So it's worked out really, really well. And so would invite you to come over to the website at blueprinttrading.com and look at what we have to offer and consider signing up for the trading room. I think you'd learn a lot if you're really serious about trading. And it also has text alerts, so even if you're in our swing trader strategy, you get notified when there's a change in the strategy that hopefully you can execute before the end of the day. So do consider that. I think you'll be pretty pleased. Not that the past can guarantee the future, but we've had triple-digit returns for 3 years in a row in the swing strategy. And I don't even try to measure the day trading strategy. It's kind of off the charts. So hopefully we'll continue to have that success. Our algorithms help us, and all the things that you're looking at right now are also a great deal of help. So consider joining. But other than that, that's about all I wanted to get through this morning. We'll be in the trading room in about a half an hour or so. So have a great morning. Have a great trading day. Be careful. We are at the top of the expected move. And, it's getting a little long in the tooth to put on a long position before next week. But we'll see what it looks like at the close tomorrow. So have a great day, and come over to the site and join us. Bye-bye.